welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com and broadcasting to you from the Dallas KFXR 1190 AM Clear Channel studios. Nick Santiago, President, CEO, on the show with me now. Nick, welcome back.
Great to be back, Michael. Thank you for having me.
All right, thank you. All right, Nick, first off, before we get into the litany of stocks that we're going to talk about with each other, how'd the trading room go?
Trading room was another successful day. It's still going on right now, and we're looking at more potential setups. But we had a pretty good day. I think we had about 5 winners, and we did have 1 loser today. So that does happen sometimes, but nonetheless, it was a good day.
Yeah, 5-1. That's a ratio everybody wishes they had. All right, Apple. You want to start off with Apple? Big drops.
Yeah, well, we talked about Apple a few weeks ago on your program, and as I said, when it got to around 560, I said I really don't see much more upside in this equity, and traders should be prepared for those lows to get tested again from November, and they've been tested and they've been surpassed. So the only level I'm seeing now for Apple that really appeals to me is around 444, and that's another 50 points to go, basically. So don't get in front of Apple. Let it drop around 444. That's going to be your play.
Okay. All right. Exxon?
I want to bring up ExxonMobil because the company reported earnings today, and that stock had a pretty good drop. Right now, I think Exxon is hitting some short-term support around the $93 level. However, if there's a bearish pattern formed, we'll look to short Exxon down to around 88, and we'll reverse that trade on the long side once 88 is tagged. So we're going to look for some kind of a pattern here on Exxon over the next week, but we're probably going to be looking to short this equity down to 88, depending if the pattern forms like I think it can, and then we'll reverse the pattern, the chart. We'll reverse the trade and go long at 88.
Okay, all right. When you reverse, are you looking for a longer-term run on Exxon on the way back up, or is this another shorter-term trade?
I think it's going to be, in the beginning, it would just probably be another shorter-term trade. But the trend is up on the bigger time frames, and that's what we always want to respect. And sometimes we can get bigger moves out of it. But right now, I would just, because 2014 should be filled with volatility, we'll just look for short-term trades.
Okay, all right. Lululemon.
Yeah, I want to talk about Lululemon because a lot of people, even in my own trading room, are getting itchy on this stock, saying, hey, Under Armour did really well today. Lululemon should do really well. Don't touch Lululemon right now until it gets down to around $41.10. Right around that level, that's where traders, I think, can step up, and you could step into Lululemon. Prior to that, I would not touch the stock with a 10-foot pole. The institutions have been dumping this stock pretty aggressively, and I do expect further downside. But around 41, that's where I'm really interested in picking this thing up for a nice bounce. I think we could probably see at 41, a nice 10% move, or maybe even a little bit more than that.
Okay, all right, I'd be happy to get. Devon Energy.
Yeah, Devon's been a favorite of mine. I know we've talked about this on your program for quite a bit, and we've even talked about natural gas, and this is a natural gas play. Right now, the stock is showing me a little bit, it looks a little bit vulnerable is what I should say. So around $56, that's where we're going to look to get long Devon Energy. And I think you could get long there for a while, actually, if things play out the way I think they're going to play out. So watch that level 56, and this is a stock that could make a 10-point move.
That's a little over $3 lower from here. Do you have a feeling that you should short it, or you just want to stand back and let it drop and then buy it?
Yeah, I'm going to stay back unless I get more of a pattern forming over the next couple of weeks. Right now, I think the way these markets are, we wake up to big gap ups and gap downs each and every day. So for me, I really do like the company a lot or I should say that the stock a lot. I don't really care about any companies, but I like the stock a lot at 56, according to my chart. So what I'm going to do is just stand back, let it get down to that level. You never know if we get a big sell-off day or something of that nature again. We'll see a move into that area. Plus the stock reports earnings, I believe, on February 19th. So I don't trade in front of earnings. I'm never in a stock right before the earnings report. So I'll let it get down to 56, and that's where I'll pick it up.
Okay. What about Ford?
Yeah, I wanted to talk about Ford because this is a stock that I was short into just this past week, and I covered it before the earnings report because, like I said, I don't hold stocks into earnings. I just think that's a form of gambling. But I'll look to snatch Ford up for a possible quick bounce around $14.50. I don't think the stock's going up before that. I think it should get down to around the 1450 level. That's where we'll see some short-term support in the equity.
Okay. All right. How do you feel about the automobile industry sector? I mean,
to be honest, Michael, I think it received a lot of hype in 2013. I bought a couple new cars in 2013, and when I went into the showrooms, they were pushing cars, but they weren't. It wasn't anything that was spectacular, according to the person who sold me my two vehicles. I'm more of a trader. I just look for the levels where the equities can get bounces, and I look for levels where the equities look appealing to me to get involved in them. But I don't buy anything. I don't believe any of the hype out there when it comes to the sector is good, the sector is bad. As far as I know, the auto loans have been the automotive industry has been moving up because of subprime auto loans. So. I just watch the charts, and that served me the best way.
Okay, all right. What about the pattern that we've got over the last several days with J.P. Morgan? What are your thoughts?
Well, when I look at J.P. Morgan, and I look at this stock 10 times a day, every day.
Right.
I said to you on your program last week that 55.50 to 55 would be the support level for J.P. Morgan to get a bounce.
Mm-hmm.
And that's kind of where we went. We went down to around 55 or a little bit lower than that. We tagged that level, and we've seen a pretty good bounce from that area. Now it's going to be all about the pattern over the next 2 to 3 weeks. It's going to tell us where the stock wants to go. My next big level on the equity is down towards 51, so that's a big move in this stock. But if we get a bearish pattern, I think the stock could head back down there. Right now, I'll give it the upside bias that maybe it wants to trade back towards 57.5 to 58 with today's action, but. Don't take anything for granted in this market. 2014 is not a bullish year. Okay,
all right. Now that's a good lead in. Yesterday we had a fund manager who was saying that they were looking for a low to occur as we on the S&Ps or the stock indexes as we go into the end of the week. I wanted to, because I've had conflicting stuff come up here. Low here, maybe another top in March or something of that nature, but and then a 2-year fall off after that. But I wanted to get your macro scenario of how you see 2014 playing out.
Yeah, I mean, we're pretty much, if you've ever followed any theories about the month of January, usually the way January goes is the way the stock market goes. The first 5 days of January were down this year. That's historically puts us at around 75 to 80% that the market will be down this year. And we've had a down January for the most part. Tomorrow the market will be the final trading day of the month. And safe to say, barring any tremendous rally, we're going to have a down January. So I think, and you know very well, Michael, I even went in on your program many times last year saying 2013 is bullish, 2014 is bearish, and I'm sticking with that theme. We're going to get a lot of volatility. When you've had this kind of a run over the past 5 years that the major indexes have had, the markets just don't roll over and play dead. There are bounces in there, and you'll get many of them for maybe 2, 3, 4 months. And then we'll start to see some real heavy downside pressure. And I think that's the picture that is being painted for the stock market.
Okay. All right. Any in your forecast, any last gasp, last dead cat bounces coming up or down from here?
Well, I think that right now we're probably looking at, a small dead cat bounce. I ultimately think when you look at just say the SPY, the S&P 500 index spiders, today we're up on 91 million shares. 2 days ago we had a rally on the 28th of January on about 110 million shares. The down moves, you've seen, over 200 million shares on the declines on those sessions. So that tells me, we're just getting short-term technical bounces from an oversold condition, and you're getting dip buyers to come back into the market, which is good because swing traders like me, we can make money both ways. We can make money on the downside, and we can catch these little interim bounces that occur for several days to a week or so. I think this is going to be the theme that plays out throughout the first quarter, and then when we get into the second quarter, I think things could be a lot more volatile, and especially the downside action. Okay, when you say a lot more volatile, are you talking like factor of 1, 2, 3, 4, 5? I mean, how much more volatile are you thinking? I'm thinking a lot. I'm thinking, we're trading, the S&P is, flirting with 1,800. Right. So, we could go test, 1,600.
Okay, so you're talking maybe anywhere between a 10, 15, 20% swings on this next as we go through 2014.
Sure, and possibly more depending on how price gets down to those levels. If price gets down to those levels in a violent fashion, then there's a lot more potential downside. But I always take one level at a time. I never really like to rush or forecast out too far. It's always easier to know what I'm going to eat for dinner tonight than know what I'm going to have for dinner in 2 weeks from now. So I just really like to take it one level at a time, and then I look at the pattern when that level is reached, and I usually can make a pretty good educated decision on what the pattern is telling us.
Yeah, I just wanted to get a feel for your thoughts. All right, we got to go, but contact info for you?
Yeah, come on over to InTheMoneyStocks.com. Take out a 7-day free trial to our research center. You'll get all of our nightly setups. Also, you get all of my cycle work. And, just yesterday I wrote in my daily market report last night to look for a pretty good bounce today based on the pattern. And, we're getting that today. So, again, we'll keep you up to par on everything that we're seeing in this market. And, I think it's something that traders shouldn't go without.
Definitely not. All right. Thanks so much.
Thank you, Michael. Have a great day.
You too. All right. Coming up on the other side of the break, Dave Lamont.